Everyone knows that the English water industry is completely broken. So how did we get into this appalling mess? And what's the real reason why the government won't re-nationalise the water industry? So, welcome to Bonkers Economics. This is where we try to make sense of Britain's broken economy using images that I've created, like this one. And this image is called the family silver. And you probably know why, but if you don't, I'll explain that at the end of the video. And you can see straight away that it's about water. And it shows two very simple and shocking numbers. Now, if you've seen my shorter video, The Great British Water Rip-Off, then some of this information won't be new to you. But bear with me because there's a lot more detail behind this story that we're going to explore in this longer video. So let's get straight into the numbers. Well, this lighter blue section here, that's the amount of money that the government received when it sold the English water companies to private investors in 1989. And that's about £3.6 billion. Although in fact, what we're showing here is more like £6.5 billion because all these numbers allow for inflation and they're based on 2019. And it's worth saying at this point, but when the government sold these water companies, they were completely debt-free. They had no debt on their books at all. And this much bigger green section here, well, that's the amount of money that the water companies have paid to their investors in the 30-year period from 1989 to 2019. And that number is 57 billion. And actually in today's money, including the last 5 years, that would now be 70 or 80 billion. So it's many, many, many times more than the government originally received. It's a huge amount of money that's been taken out. Now, just to be clear, that money's gone out in dividends. What are dividends? Well, they are the return on capital that a company pays to its investors. So the investors put money in, they get a dividend out by way of a sort of interest on the money they've put up. So this is a huge amount of interest, if you like, for an investment of this size. So how's that come about? Well, it is fairly crazy. This series is called Bonkers Economics for a reason. So let's dig into what's going on. So what about all the investment that's been made in the water and sewage systems since 1989? Aren't the water companies entitled to a return on that money too? Well, this is where it gets interesting because it's certainly true that a lot of money has been invested in water and sewage systems, about £123 billion by some calculations. But where has that money come from? You might imagine that the water companies had got it from their investors and they were looking for a return on that capital. Or possibly the water companies might have borrowed it on the open market. They might be paying interest on that money and they might need a return on their investment to pay back that interest. Both of those would be fairly normal ways of raising capital for a project like this, but it turns out that the water companies have done neither of those things. Well, they certainly haven't raised any new capital, that's for sure. This amount here is pretty much the only new money that's been put into the water industry by outside investors in the entire period. But what they have done is they've borrowed quite large sums. The water companies have borrowed about 50 or more billion pounds over the period. So that, therefore, could be an answer to the question, where's the money come from, or some of it at least. But the catch there is that pretty much all, in fact more than that £50 billion, has gone back to the water companies by way of dividends. Look, this number here, this 57 billion, that's more than 50 billion. So the entire 50 billion of borrowing has been swallowed up in this big green splodge here, which is the return to the company's investors. So that's not gone into infrastructure. That's not gone into fixing leaking pipes. That's not gone into fixing or building new sewage systems. That's just gone straight back to the investors as profit, which means in practice that the water companies have invested absolutely nothing in the water system at all. So if they haven't invested it, who has? Well, the answer is a bit shocking. The answer is you and me. The answer is water bill payers have put up all the money that's been invested in the water and sewage systems in the last now 35, 36 years. So all that investment in sewage and water, that's about £5,000 per household, incidentally, that money has come from us. It is our investment. And yet the water companies are treating it as being their investment, and they're paying themselves a return on capital as if the money had always belonged to them. And that is, in essence, the Great British Water Rip-Off, although we should call it the Great English Water Rip-Off because the Scottish and Welsh water companies are in fact publicly owned. So what's happening? Well, these English water companies, they own and they pay themselves a return on all the investment that we, the bill payers, have made. So with that in mind, let's just look at what would happen if the government had not sold the water industry. What would the situation now be? Well, obviously, first of all, the government would not have got its £3.6 billion. That would have been a slight loss at the time. But it could, nonetheless, have invested the £123 billion that has been invested because that has come straight out of our water bills, and it could have come out of our water bills in the same way. And it could also have invested this huge amount here, this £57 billion and counting, because it wouldn't have had to pay it to outside shareholders by way of dividends. So that's £57 billion, now probably £70 billion, that could have been spent on the water system, fixing broken pipes, fixing sewage outflows, making the system fit for purpose, money that's not been spent but has gone straight to shareholders. Or it could have decided not to do that, of course. It could have said, no, we don't want to invest that extra money. And that means that our water bills would have been a great deal lower because we wouldn't have had to pay for this enormous dividend and we wouldn't have been paying for the borrowing which the companies have taken out, on which we pay the interest again through our water bills. By some estimates, our water bills would have been 20 to 30% lower if we weren't paying for those things. Well, that's obviously a better outcome, so it does rather raise the question, why did the government privatise the water industry in the first place? Well, I remember that time well, back in the 1980s, and that was when the Thatcher government was fired up by new ideas, which we now call neoliberalism. Everybody thought the private sector would do a better job. Everybody thought these injections of private capital were what were needed, private management. Everything was about the profit motive. Everything was about private investment. But what they missed completely was that this is a monopoly. The water industry is a monopoly which allows these sorts of things to happen. There was no competition. There was no incentive for the private sector to do things any better. The only incentive was for them to take as much money out of the situation as possible. And as we can see, there was actually no new private capital introduced at all. So the idea that the whole thing would be fired up by private capital turned out to be a complete nonsense. So clearly, by any measure, this was a disastrously bad idea. And that, I guess, raises the question, well, why doesn't the current government, Labour government after all, why doesn't the current government re-nationalise the water industry, take it back into public hands and get rid of this extraordinary drain on public resources that these dividends represent? Well, there are a few reasons, and the first one probably is because they don't want to take the blame for how terrible the situation currently is. They rightly suppose it will take some time to turn around the system, to get rid of the appalling sewage outflows into our rivers and seas. It's going to require a lot of time, a lot of effort, a lot of investment. And while all of that is going on, the government doesn't want to take the blame for the fact that the system's not working properly. And that's not a minor consideration. I suspect the government thinks that's quite a big deal. And secondly, the government says it can't afford to take back the water companies. It can't afford to buy them back. It says it would cost $100 billion or more to buy back the water companies. Well, that's based on the fact that the water companies have invested all this money, this $120 billion or whatever it is, in the water industry. They're saying, look, they put all that money in. If we're going to buy back those companies, we've got to pay them back for the money they've invested. But as we've seen, that's also complete nonsense because the companies haven't invested any new money in the water system. All that money has come straight out of our bills. So that means all those improvements belong to us. And if the government were to pay the companies for them again, then that's double accounting. That's paying twice. We've paid once, the government pays again. That doesn't make any sense at all. If the government's going to value the water companies prior to a nationalisation, then it needs to strip out all the money that we've put in as bill payers and say that's not part of the deal. So in principle, I think the government could renationalise the water industry for almost no money at all. In some cases, the companies are worth less than nothing. In the case of Thames Water, it's debatable whether it's worth anything at all. But again, there are other reasons lurking beneath this. There are other reasons why the government doesn't want to do it. And I think with this next reason, we're getting to the sort of heart of the problem. because we hear continually about foreign investment. The government is always going on about the need for foreign investment, for outside investors to come into the UK economy to keep things going. And the government is frankly terrified that if it does a number on the water companies, if it tries to buy them back for less than they think or their investors think they are worth, even though we know they're not really worth anything, if it tries to do a number on them, then it will put off foreign investors. That money flowing into the UK economy will stop flowing and the whole shaky system will start to fall apart. So why is this foreign investment so critical? Well, partly because of the government's completely arbitrary fiscal rules. It doesn't want to borrow money itself because that will break its rules. It will make it look as if it's borrowing more money than it should. But it's quite happy for outside investors to come in and put money into UK infrastructure because it doesn't appear on the government's books. But that's actually incredibly short-sighted, because when an outside investor puts money into something like a railway system or a water company or something of that sort, then in effect we are borrowing that money. In fact, it's worse than that, because we're borrowing that money while giving away the asset itself. So we still have to pay interest on it. As we've seen, we still have to pay huge amounts of money back to the investor. So wouldn't it be better if the government just borrowed more money at lower rates of interest itself? Well, it would clearly be so, but the government doesn't see it like that. It has these rules, it refuses to break them, and so it's scurrying around trying to find money from elsewhere to paper over the cracks to get money into the country, which doesn't appear as debt on the government's books. So that's part of the reason. That's not a good reason, but nonetheless it's the reason the government has, and it explains to some extent what's going on in their thinking. But the rest of the reason, and actually the real core of the reason, is something else, and that we're going to find out by looking at another image which I'm going to show you here. So what this image shows is the trade balance in the period from, roughly speaking, 1950 to today. And this blue line here is the midpoint in the late 1980s, 1986 in point of fact. And what we can see is that before 1986, from 1950 to 1986, this little black box here, that represents the total of the trade balance. In other words, the difference between imports and exports. So we exported a little bit more than we imported in total during that period, and so we ended up slightly in the black, slightly up in the numbers. And then since 1986, look what happened. Well, we've got this flood of red ink. Since 1986, we've been persistently importing far more than we export, and that has caused us to go massively into debt, and that debt is just accumulating and getting greater and greater every year. And what do you do when you're spending more than you've got coming in? Well, you can go on for a bit, you might be able to borrow a bit of money, but ultimately you've probably got to sell something. That is, if you're lucky enough to have something to sell. And the UK's got plenty to sell, and it's been selling it year after year after year. For decades now, we've been selling everything that's not nailed down. We've been selling houses in London to foreign investors. We've been selling our water companies, our energy companies, our airports. We've been selling even our foster homes are now run by private investors in America. We've been selling our care homes. We've been selling the rail system. Many, many well-known British companies, many, many iconic British brand names are now owned by foreign companies. In fact, something like 2/3 of the London Stock Exchange companies are owned by foreign investors. So almost everything that's not nailed down has been sold. And the government's concern is if it doesn't allow the foreign owners of the water companies to continue to take significant profits from their businesses, then that will deter all sorts of other people from buying into the UK market, from spending their money on UK investments, from buying our assets, and from bailing us out, and from doing something about all this red ink to provide the money that will pay for it. And this is what the former Governor of the Bank of England, Mark Carney, who's now Prime Minister of Canada, incidentally, this is what he calls living off the kindness of strangers. And the government can't afford to alienate those strangers. It can't afford to risk that money no longer coming in. So it does everything it can to create as friendly an environment for foreign investment, so-called, for foreign purchases, for foreign people to come and buy our assets or lend us money, as friendly an environment as it possibly can. But that's not the end of the story, because the key point which the water industry so brutally demonstrates is that people don't invest money without expecting a significant return, and they always expect to take out more than they put in. So if we go back to the water image for a moment, we can remind ourselves of what happens when a small investment turns into a huge financial return. So most of this money, most of this 57 billion that's been paid in dividends, most of that has gone abroad. And that means we've now got to sell something else to pay back that money. It's always that way with investment. The investment comes in, ultimately the profits flow out. Eventually the amount that flows out is more than the amount that came in. So something else has to be sold in order to pay for that. And so it goes on, and we're on a sort of slippery slope. And the day will come when we run out of things to sell. The day will come when all we are doing is working to pay interest or profits to foreign owners of the UK economy. So there we are. Welcome to the UK economy in 2025, because I reckon we're well on the way to that situation. If you follow Gary Stevenson of Gary's Economics, you'll know very well that he talks about the way in which the economy is designed to shift wealth, shift money from the working class, from the middle class, into the hands of wealthy investors. And he doesn't always remember to point out that many of those investors are actually abroad. So that money is not only moving through the system from working and middle class people to very, very wealthy people, but it's also moving out of the UK altogether in many cases. And here, as I say, is a perfect example of this happening. So what's the solution? Well, we need to tax wealth, not work, as Gary says. That's certainly important, but tax policy may not be the whole solution to this problem, because it's really hard actually to take money away from people who've already got it. It's really hard to dig it out of the places where it's got hoarded away. And so we need to think about ways that it doesn't get there in the first place. We need to think about how an economy can be structured so money is put to good use, it continues to flow, and it doesn't end up stashed away in foreign bank accounts. And the first thing to do is to try and wean ourselves off foreign investment, because frankly, that's one of those phrases that's been buzzing around now for decades, and it really isn't the solution to our problem. What we need to do is invest in ourselves. We need to make sure that money in the UK economy is put to good, productive use, and that it stays in the UK economy, that it produces more of what we need, so we don't have to import quite so much. And also, we need to make sure that it ends up in the hands of people who are, in fact, the most productive, people who make things and do things, rather than people whose job it is to find ways of extracting it and shifting it out of the economy into the bank accounts of the very rich. And that's not an overnight fix, to be sure, but we could start by not shooting ourselves in the foot. After all, the government says we need to invest another 100 billion in the water industry and the sewage industry in the next 10 years. Well, let's start by making sure that 100 billion that we're going to invest, all of which will come out of our water bills, incidentally, let's ensure that all that investment ends up belonging to us and doesn't get given away to some offshore investor. And for that, the government simply got to ring fence that money. It's got to say to the water companies, look, you can't have a return. You can't even own an investment that you haven't made. You can't own it and you can't have a return on it because it's not your money, it's not your capital. And that would be a simple thing to do. The government just has to change the way in which the water companies are regulated. It just has to change the rules so that they're fair to us, they're fair to the bill payers, and they're not allowing the water companies just to extract completely unjustified profits. So that's a start. That's a sort of picture of something we could do now in relation to the water industry. More generally, there are a stack of other solutions. There's an awful lot of ways in which we can rejig the economy to ensure that money stays where it's needed and doesn't sort of drift away as it's tended to do over the decades. Those are things we can discuss in future episodes of Bonkers Economics. I've got a great stack of images like this one, with images which explain what's going on and how we can fix things. And we'll get to those over the coming months. But before I finish, I did say at the beginning I would explain why this image is called the family silver. Well, the reference is to something said by Harold Macmillan, who was Prime Minister in the 1950s. He's the man who said, we've never had it so good, incidentally. Well, back in the 1980s, after the privatisation thing had been going for a while, he gave a speech in which he warned about selling off the family's silver. So he came from a patrician landed background. He had lots of friends who had grand country houses and that sort of thing. And he said that what tends to happen is that people start off by selling, I don't know, the paintings they've got in their house, and then they have to sell the furniture. And then they have to sell the family silver. And then they might end up selling the house itself and the grounds. And suddenly the whole thing is completely gone. And he pointed out that this is what we were doing in Britain. We're gradually selling off our assets. Before long, we won't have anything that we can call home. We won't have anything we can call our own. And I reckon we've gone a long way down that path already. I think the paintings and the furniture, they've well gone. And this is the silver that's gone too. In fact, the house may have gone for all I know. Certainly, if we scratch around in the attic, we might find the odd weird sort of dusty heirloom that we can flog off if we're lucky. But we are a long way down that path, no question of it. And I think it's interesting to notice that this problem was identified 40 years ago. It's not something we're discovering recently. Once your assets are gone, they're incredibly hard to get back. And the UK's assets are now mostly sold. So, sorry to leave you on that gloomy note, but thanks so much for watching. If you've enjoyed the video, please do press the like button because that's really helpful. And please do subscribe if you want to see more episodes of Bonkers Economics. And please do tell your families and friends, anybody you think might be interested. And also please do check out the website. It's bonkerseconomics.net. Here you will find all the images that we've used, and we will find the data behind the images. You'll find where that data has come from and quite a lot of written materials to explain what each one means. Thanks very much.